What's up, guys? Welcome back to another episode of Rawstocks. I'm Rustic, and today we're going to be taking a look at Tesla's chart. We're going to look at where price came from, where price ended today, and where price is likely to head tomorrow. Before we get into it, want to remind you, don't forget to smash a like, subscribe to the channel, share with all your friends if you like the content we're bringing you. Continue to bring you daily analysis of Tesla's chart. Also, there's some new merch in the merch shop, so check out the description below, as well as the link to the Traders Helping Traders Discord, which is where I can be found hanging out during market hours. We do call outs over there, we do technical analysis, and we overall have a good time. So if you aren't a member of that Discord, go ahead and join. The link's in the description below, as well as other ways to support the channel if you like the content that we're bringing you. So let's go ahead and dive into the chart today and take a look at what we did and how we respected some of the things that we talked about over the weekend edition. So I took it off the chart because it's not on there today, but we had our weekly range, daily range low here, and you can see that we hit it and we closed down a little bit below it in the wick, but we did not close the daily candle below that low, right? So that was a little bit of a fake out if you were looking at this bull channel that we've been talking about. It was a little bit of a fake out if you're watching it on the 1 minute or the 5 minute chart, where we did come and we traded right below this bull channel. Looked like it could have been a breakdown with all the news that we had over the weekend and the way that we gapped down during market open. We did see that trade down below that channel. But I was calling it out in the Discord to be watching very carefully on the 15-minute chart, and I'll show you when we get down to it that we wanted to see candles continue to close below that bull channel support line in order for it to be validated as a breakdown, right? And we'll see as we dive into the shorter time frame charts that was not confirmed as a breakdown. It was a false breakdown. We ended up rallying back up, right? And we ended up rallying much, much higher. One of the calls we had today was a 255 call contract for options. We had some traders taking stock trades as well, but we had a nice rally. We were looking for 256 as the first take profit target. We ended up running much higher up into the 260s, even higher all the way up to 261, mid 261s, right? So there was a nice trade in there. I know it went for about 70% on the contract, maybe a little bit more. I know I was able to paper trade that as my funds were locked up due to Robinhood and banks being closed, but it was a nice call out. We had some traders take the trade. They turned a nice profit on it. So again, those call outs are happening in the Discord. Okay, so we came back down. We tested that daily range low where we wanted to see containment happen, right? And we did not trade all the way back up to daily high potential of 261 and some change. Okay, some things that we do want to note. I'm going to take this level off. This was just to show you the containment for today. Things to note on the daily chart. We still have traded into this large daily fair value gap, right? We have tested it. We held a higher low compared to Friday's price. Okay, but we also set a equal or lower low on the wick here. Closing price below the closing price of Friday's price action, right? And so we have an inside day bearish candle, even though we did trade up through the session. We did not trade above the price from Friday's candle, so it is considered a bearish candle. Okay, and so we are setting lower highs here, and so I wanted to show you this trend line. We have an aggressive trend line coming from the top back in Friday, September 15th. Okay, connecting the wick here and connecting the wick here. So we have a more aggressive, right? We did have an aggressive trend line back here. That was a bearish channel. Now we've moved that trend line to be representing these wick touches as we set lower highs. Okay, and so we're going to be monitoring that. If we get a breakout, then that trend line is invalidated if we're closing daily candles above that more aggressive bearish resistance trend line. Okay, so that's what we're going to be watching for. We also continue to test this bullish channel support. Okay, we tested it on Friday. We tested it again today. We tested it back here in the previous week. Okay, and so we want to continue to look at that bullish channel support as buying opportunities until we start to close daily candles below. So what does that mean for tomorrow? We're looking at the daily range low contain level, right? 255.27, 255.30, something like that. Okay, so we want to see price potentially, if it were to come down here, contain this level, right? Another buying opportunity on support, and see if we get the day to close above, and that could be another buying opportunity if we come back down there. We could see it come back down because we do have this fair value gap that we continue to toy with, right? And if you remember from back in August, we had a large daily fair value gap here, and price continued for multiple days in a row to toy and test and kind of coil, right? Building up momentum for the next move, and in that case it was a move higher. We had a nice big gap up. Okay, so are we doing something similar? Right, we set the fair value gap on last Thursday. Okay, we traded into it, 2 sessions we traded into it, right? Could we trade back into it? Now this bullish channel support is going to continue to hold us. We did not quite have the same channel support right here, and so if you were to draw a trend line from like down here, up here, we did not quite have the same degree or the same like aggressive trend line, I suppose. Here it was a little more mild, right? And so here we have a very aggressive one. So if we are continuing to respect this trend line, and this is where trend lines can sometimes be not be the best indication, because trend lines can adjust, right? And so if we started trading candles below the bullish channel, doesn't mean that it's going to completely give out on the move. It could be a little bit of manipulation where we see price trade below the bullish channel. We might then adjust our channel, and it could still be in a bull move. So that's where we're using our smart money indicators, right? And I use the smart money concepts indicator by Lux Algo on TradingView. And we're going to use this smart money indicator as our true sign, even if this channel starts to break. Because as long as we keep 250, the 250 level, and we keep this fair value gap open, okay, then the trade is still on the table that we could run higher in the other direction. We have not gotten to this 15-minute fair value gap, and we'll see that in a lower time frame. Okay, and I do believe price is wanting to run up into this fair value gap where it naturally acts as a magnet. Okay, we also have some other things on the chart that can be seen on all different time frames, but we have a previous day high, which we nearly tested. We didn't quite hit it with today's wick. And so there's liquidity in the previous day high from Friday that we have not taken yet. Okay, and we also have a daily buy side liquidity that was found in last Thursday's wick. Okay, and at the very top, but this entire wick, which we've drawn on twice this week, or on Friday and today, we've drawn on the liquidity in this wick, and we have not gotten all the way up to the top. So I do anticipate we're going to try to make a run for that liquidity and for this fair value gap. It would still be respecting this bullish channel if we made that move. And so really we're just buying time as price determines which way it's going to go next. Right? And so again, we're looking at this daily fair value gap, and we're looking for it to hold. We could also run all the way down. We have sell side liquidity in both today's low and Friday's low. Okay, so we'll mark those off as sell side liquidity. Okay, we have this sell side liquidity here, and it was a previous day low. Now it is Friday's low. Okay, so let's go ahead and take that off of our charts as a previous day low. And we're just going to label it as sell side liquidity. Okay, and then in today's low, we're going to label that as sell side liquidity and previous day low. Okay, now today our previous day high is basically the same as yesterday's or Friday's previous wick high, so we're just going to leave that as the liquidity target, because if it gets up here tomorrow, it's so close, it's going to take today's high and Friday's high all at once. Okay, I do have the daily bull bear pivot for tomorrow, right? If we get up to 262.86, right, and then above that, we would be incredibly bullish if we were to break that level. Okay, it would put us in the upper boundary or the upper half of this bull channel. right? And that would be very bearish as we make, or very bullish, sorry, as we make a run towards the 15-minute fair value gap, and then the daily range high contain, okay? Above that, we have additional targets that we set up over the weekend. I don't think we're going that high tomorrow. But we are running into earnings season. Earnings comes up on the 18th, so we only have 9 days, less than 9 trading days until we get there. And so things can start moving quickly if we start seeing price want to rally heading into earnings, right? But if we also see price start to fall apart because of these lower high, lower high, lower high, right? I mean, this is the higher high of this move, but lower high compared to these highs, right? And so could we see price break down? We'd be taking sell side liquidity, previous day low, sell side liquidity here. We have a daily volume point of control, which was from a volume node. Showed you guys that over the weekend when we set our chart up. And that comes from this entire move, looking at the volume during that move. And we find that there was a point of control volume node that was very clear down at 246.39. So if we did start to fall apart, take some of this liquidity, close this daily fair value gap, could we head down to that daily volume point of control? Totally possible. Could see this, even if this is going to be another bull run, we could see this head up, head back down, see if this point of control wants to hold. It would invalidate this fair value gap, so it would be off the table, right? And at that point, could we see it run even higher than that? If we do start to see a pullback for an eventual bullish move again, our targets are going to be up here above. I'm not necessarily expecting that we're going to come back down into this fair value gap, but anything's possible, right? The strength that Tesla has shown over the last week compared to the rest of the market has been pretty phenomenal. So at this point, we're really just paying attention to the bull channel until that bull channel gives up. We do have some other diagonal lines. If you want to look at, basically the high from July, right, connecting the high from September. We have this less aggressive trend line that's also bearish, right? So if we were to push up towards this fair value gap, right, would we anticipate some kind of reaction up here on that trend line? Definitely. Could it just be a pullback to break through? Certainly could. So we're just going to be watching this trend line here, which is bearish, this trend line here, which is bearish also, as we're in a bullish channel, to see what trend line wants to be respected the most. This is a pretty aggressive channel right here, so I wouldn't be surprised if it does start to fall apart at some point, but then make a move back in the upward direction. So all things that we're watching, all things that we're considering, right? So let's drop down into the 4-hour chart today. And we see something similar. We see that, breakdown here. We do have a 4-hour fair value gap. Let me go ahead and turn off my macro time frame indicator. Okay, so we do see a 4-hour fair value gap, also similar to where that daily fair value gap was as well. We've traded back into it. Today we traded down to the consequent encroachment of it, which is the 50% level. Okay, and then we ripped up in the other direction. We were not able to break above the highs in these wicks. So could they just be a draw on liquidity that rests here for a move in the downward direction? Certainly could. But again, we're watching our daily contain for tomorrow. We're watching our bull bear pivot. We're watching where liquidity sits in this previous day high and the daily chart buy side liquidity, which is found at the top of this wick, right? And we're seeing if price wants to move up into the fair value gap, because it is magnetic, right? And very often, especially smaller ones like this, price will drop into it before it decides to make a move to either head lower or just do a little correction and then break through it, ultimately heading higher. We do have liquidity built up here. We have equal high, right, on the 4-hour time frame. So these wicks are relative equal high. I have it marked off as a level. We'll move it down a little bit, but it just shows that these are almost equal highs, and equal highs often get taken. So at some point, we will be back for those equal highs that rest around 273.66. Right? But we're not there yet, so don't count your chickens before they hatch. Right? And so we are looking again at the 4-hour chart. The trend looks a little less aggressive as far as the bull channel goes when you're on a lower time frame chart, or as you start to go down on the daily, it looks very aggressive. Right? But we're still in the lower quadrant, so this could give up at any point. And tomorrow, within that first hour, we should see, whether we want to make a move on this more aggressive bearish trend line and take that out. A lot of it's going to depend on where price opens, but you did see again on the daily chart, you saw a inside day candle, but on the 4-hour chart, it tells a lot different story where we got that early sell off and then we had a huge rally up during the second half of the session. So nice trade in there if you were able to catch it either off of the support, right? When we're in a bullish channel, we're buying at support, right? And we're selling at previous highs, or we're selling at resistance if it looks like we're getting up there. You can also look to trade or exit your trades inside of this, median support or median resistance, because we are in the lower boundaries. That if you were buying on support, you could be selling at resistance in the middle here, and then once we break out into the upper boundary, if we do, you can be again looking to buy the median and sell at resistance up here, or waiting for price to come back down and test the trend line again, ultimately buying again at support until it no longer offers support. Okay, as we drop down into the 1-hour time frame, we see today there was another fair value gap, so we'll see if price wants to trade down into it. Again, we have our daily range low contained here, right? But when you drop into these lower time frames, you realize hour by hour that containment level raises as we look at the trend line, right? Because this is going to only be the first hour where we have it, where on the day it shows, on the same level because it's a daily candle. But here we have multiple hours of trading, right? So we got our first, second, third, fourth, fifth, sixth, and seventh, right? So our daily contain moves all the way up to 257 from what was 255, right? And so as the day goes on, we're looking for that support level of that trend channel to hold. We also have this 1-hour fair value gap, so we're looking for that to hold. We could come down to trade into consequent encroachment. If we get it early, we might come down and test the lower boundaries, which is 256. That is something I'm watching for, is that we do have a change of character that happened on this wick over to this candle, and you'll see it when we drop into the much lower time frames. But there was a change of character here, and because this candle was so bullish and this move happened so quickly and it just went ripping, there was an unbalanced price range that sits around the 256.50 level. And so would we be looking to come back and balance that price range really quickly, fill the orders that are sitting around in these order block or in the fair value gap, right? Because the algorithm will want to rebalance price because this is inefficiently delivered price. And so could we see this come back down, balance price down here at 256.50, and then run up in the other direction? That is definitely something I'm watching for. So there could be, if we do trade down, there could be a really great long entry somewhere inside this fair value gap and somewhere on the support level. Okay, and so let's drop down again. Same targets for the upside on this chart. If we drop down to the 15-minute chart, you can see a little bit better idea of what happened earlier today. Okay, and what I want you to notice is that we have this fair value gap. Okay, we traded down to it. If you look at the low, we didn't quite get into the fair value gap, so it's continuing to respect that 15-minute fair value gap, right? And if you look at today's low, we didn't even get down into the liquidity in this wick, and it continued to hold, right? And so I'm not quite sure why it chose this particular spot to end. I do think I was telling the guys in the Discord and the traders that I think this is a false breakout, right? And so what I said is this candle right here, okay, I said watch the 15-minute chart very closely and see what happens over the next 15 to 30 minutes. So we got one candle close below. I said even more important that we watch what happens here. The very next candle, we closed back above. I said false breakout, okay, watch for things to rally. So our target on our trade, and there was some on the lower time frame charts, we'll look at it, but there was some indication down in this area that we were looking to enter another trade for the 255 call, right, or enter your shares, and our first target were these wick highs up here in the mid 256 area. Okay, and that was going to be our change of character. From there, we're not sure quite where price is going could it run on buy side liquidity? There was low participation in the market today because banks were closed. So you probably had a high retail presence, and also the algorithm is going to deliver price to where orders already sit, and orders already were sitting because we chose not to head down into sell side liquidity. Orders were sitting up here in the buy side liquidity, and we didn't quite get there, but we did get the gap fill, so that was a positive sign. And then we got the late session sell off, just some profit taking, right? And so that does show again this bearish trend line here where we traded up to it, and then we started to sell off from it. So tomorrow when we open, do we come down? Do we test this channel support, right? Do we test our daily range containment level as it moves up, right? And then again, we have liquidity that sits up here, and we have a fair value gap above. So even if we do trade down, do we see another rally up into liquidity tomorrow? Totally possible. Something Tesla does like to do is it also likes to gap liquidity at times. You can see over here, right? We have sell side liquidity. It just gaps it because then those orders can't be filled. If there's stop losses sitting here, limit orders, and it gaps it, those limit orders don't get filled. Because the price is so far off of where that limit order is that it doesn't fill it because they wanted that price. Or if it does get filled, they get filled for a very awful price. This price, just straight up gapped where those orders sit, right? And so similarly on this low here, we had probably stop losses if people went long here. And so it gapped it again, right? And so Tesla is pretty notorious when it continues to try to test a range. Like if you see up here, we got, candle highs, wicks, candle highs. We continue to kind of test this 261, middle 261 level, and we keep getting rejected. So it also wouldn't surprise me to see a straight gap into like the 262 price and then make a run towards the fair value gap, take this liquidity that sits here, and then see a move back down, whether it's a small correction to go higher or whether it's a larger correction that ends up selling off significantly, right? That could take us back down into this order block that sits here, much further below. So we'll be watching to see how that all plays out. But again, Tesla does like to gap certain areas that have been found as resistance. If the smart money is trying to run the price up but continues to encounter resistance up here, we could see a gap. Dropping down into the 5-minute chart, again, we see a more clear picture of what today's price looked like during the intraday trading. Okay, so you can see here, again, we had that sell-off on the 5-minute. I was watching the 15-minute because I wasn't buying it. I wanted to see 15-minute candle closes below the trend line. This could have faked you out a little bit more because it came down, it back tested, right? It sold off on a whole 5-minute candle. That looks pretty bearish if you're only watching the 5-minute candles. You're saying, oh shoot, we broke, we back tested, we're breaking down, right? There's the trap. Okay, the trap was in this candle. And then what happened? Next 20 minutes, price ran up. Okay, we're looking for this micro change of character that happened from this high in these candle bodies to this candle right here that broke out above. That's a micro change of character. We had a reversal. Okay, if you didn't enter in that position, and we also had a fair value gap, and I will show you where that sat. So these are early indications. Sometimes they can be a little ahead of the move, and you might see a move back to set one more low. But you can try to take the trade, and if you were to take the trade, you would be potentially setting your stop loss down here at this liquidity, not on this low. Because sometimes what you'll see is a little fake out, right? The change of character will happen, and we'll roll back over, and we'll go one more run on stop losses down here in this low. Okay, and so you don't want to set your stop loss right here. If you entered the trade early, you want to let it play out a little bit. So you'd set your stop loss down here at this sell side liquidity and see what happens. And then in this case, you would not have got stopped out. But you had this micro change of character here in this 5-minute candle. We had a breakout. We had a little fair value gap. Okay, and I did call that fair value gap out. We had some wicks trade below, so it did get a little scary if you entered the trade early, right? As we continue to start to look like it trades through, but we never actually close that fair value gap. The indicator's not going to show it because the indicator actually sometimes closes when the wicks trade through. But the way fair value gaps are traded is it's candle bodies closing in order to close the fair value gap. So sometimes if you're using the indicator, you got to slap in your own fair value gap really quickly in order to continue to monitor that, right? And again, if you entered the trade and it started to trade down through this fair value gap and you wanted to exit, then that's a low risk entry and exit inside this fair value gap once it was painted. Ultimately, it kept it open, right? And we ran up. And then we came back down. We had another fair value gap right here. And you can see it's not on the indicator. Okay. But we did not actually close that one either. And it was very tight. Candles traded through it. Candles came right back down to it. It never actually closed. It came down literally candle bodies closing on the low of the fair value gap. Right. So comes up, comes back down, rips back through, hits our original price target right here of 256, right? You get a bigger change of character that happens right there. Now we have an unbalanced price range right there. Okay, and so if you're manually charting, we got a change of character and we got a 5-minute unbalanced price range. So we'll see if price wants to come back down and rebalance that in tomorrow's session. It could leave it open as we run higher, and eventually we will come back and rebalance that price range. And that happens when you have a change of character where price rapidly moves and price is not, the algorithm is not able to come back down and balance that price range. We saw a very explosive move as price ran up into fill the gap, did not quite get to buy side liquidity, hit this consolidation range with some wicks, and then had that again late session sell off. Okay, but as more fair value gaps, and I've taught this in other, I have a TradingView tutorial on how to trade fair value gaps, but there were lots of opportunities to build your position. Okay, and so again, fair value gap there. Okay, each one of these candles that's inefficiently delivering price to buy side is an opportunity to enter in additional longs and build your position. Okay, and I'm not being specific with these fair value gaps, but every one of these you can be adding to your contracts. Okay, you can also be taking additional contracts that have different strike prices, right? But look at all these fair value gaps. These were all opportunities to enter or build additional positions. As we start to stack them, you can also look for that to be your exit strategy, right? Because if we were targeting previous day high and we were targeting buy side liquidity, right, and price did start to come back down, we never actually closed this one, so that is a fairly bullish sign unless we just gap it in the morning, right? But we never actually closed these. As we came down and traded into them, you could look to exit your position here if you haven't already exited up here. But you know, early entry, right? Second opportunity to enter. You can wait for the confirmed change of character, okay? Because we had a micro change of character down here, but this is a big change of character, and this is a better confirmation. And we were, again, down here, we were toying with the bullish channel support, right? Again, good buying opportunities on support, but at any point this could have come back down and taken sell side liquidity. So don't necessarily trust it. We could also look at RSI, and we could see that there was a divergence setting up, right? We had a divergence on the 5-minute chart where we had a lower low on price and we had a higher low on RSI. So a good way to use your RSI tool to say that, okay, we've got that divergence, right? We saw our micro change of character. We got our first fair value gap we entered. If you didn't grab it, you got another fair value gap. You got another opportunity to enter long. Okay, then we had the larger change of character with a fair value gap, another opportunity to enter long. Then you can ride your position out, or you can be adding inside each of these fair value gaps, adding to the contracts that you hold or adding additional contracts. As price came up here to 256, you could have moved your contract to 260, right, and bought some 260s as well, and we ended up running up to hit it because we know what our upside targets are, right? I'm going to take off these 5-minute fair value gaps and we'll drop into the 1 minute, and the 1 minute chart is the one that you guys know that I mostly day trade. But you got to look at some of the other time frames too, because there's stories that are being told that don't show on every single time frame. So we'll go ahead and look at the 1 minute. We'll see if we saw some of the similar things, right? Again, RSI, we had divergence, okay? We had it right here, lower low on price. Now let's look at market structure, because market structure is a key thing to be watching when price is developing on a lower time frame chart. And so by manually entering this, we could look at this high, and we could look at this point here, and we could say there was a micro change of character or an internal structure change of character here, right? And we got a nice breakout candle. There was a fair value gap right here on the 1 minute time frame. So that would have been probably your first indication on the 1 minute time frame, besides the divergence, because we did have a little fair value gap here as well, and I'll mark that off. Okay, so we had two fair value gaps. You can wait for the change of character to happen, which is probably the safest, because at this point, this fair value gap here was underneath the bullish channel support trend line. Okay, so what I would have probably waited for is for this change of character on the internal structure to happen. Okay, we had a bullish fair value gap right below. Price traded back down into it. Okay, and then it ran from there. So you could have entered again in this first micro change of character, which is probably about the same as it was represented on the 5 minute chart. Okay, and then if you didn't get in there, you're looking for an additional change of character. Here we got the indicator to give us a change of character from here to here. Okay, so the safe entry would have been either in this fair value gap that did paint on the 1 minute chart, okay, or once we broke and changed character to the upside. Okay, you could have waited and entered on that break or on that change of character. Now, sometimes what happens is you have price give you a change of character, and then we might have traded back down into the fair value gap and then ran from there. And so waiting for that change of character doesn't always give you the best entry. I think fair value gaps and order blocks give you the best optimal entries as far as those kind of indicators go. But waiting for the change of character is a safer bet. And so after this move happened, we have an order block that was painted here, and that's all she wrote. You can see price just continue to run up, set fair value gaps on the 1 minute chart, respect those fair value gaps, right? Another one traded back down, rallied up, right? And then we've started to trade back down too, but haven't quite gotten into this bullish fair value gap at the top, right? So if we start trading down, we'll start closing some of these fair value gaps. They might be magnetic, they might pull price down. But if you look at this 1 minute, and we look at what tomorrow's daily contain area is, and based on the trend line, right, this is already outside by tomorrow's price action. This fair value gap is already outside of where our bullish trend line is. So if we break that trend line, we come back down into this fair value gap, and we come back down to test this order block. That is a low risk entry, but we're also considering things to potentially be bearish at that point, because we are breaking the channel support, right? And we'd be starting to, just really look like it was breaking down, because that'd be a big move, basically giving back most of today's price and giving up some of the bullish things that we have going on, right? But we also have order blocks above that we want to be watching for on the 1 minute time frame. We did trade into it, and that's probably where we got this reaction from on the profit taking and the sell off at the end of the market, right? And that order block came back from Friday. From the high here, where we had a reversal where it started trading down, right? So we traded up, low risk entry to take entries inside order blocks, right? Because they're very clear. You can take an entry anywhere inside the order block, and you set your stop loss just right above the outside of the order block. In this case, it was a bearish order block, so you enter somewhere in. You can take the first entry. You can see if it trades back into it. You set your stop loss just outside of it. It's going to be a very low risk entry. You can almost always guarantee that when price trades to an order block, there's going to be some kind of reaction. It may not be a huge reaction, but there is a very nice scalp in there from 161 down to closing price in the 159 range, right? So you got a $2 move, or $2-ish near the end of close. You could have grabbed a weekly contract, wrote a scalp down, closed it out before the end of the day. You would have ended up with a nice little scalp there. So the short time frame chart doesn't really give us a whole lot of indication of where price is necessarily going, but we do want to be watching this change of character, right, that happened on the 5 minute chart. We'd also say this one down here, if you wanted, is also unbalanced price range. on the 1 minute chart. So could we see price come back down, test this trend line of support, right? Balance this price range and then head higher? Definitely. Could we see price run up into the order blocks tomorrow and take some of them out? Again, some of the liquidity. I do really think we're ultimately heading to this 15-minute fair value gap that rests much higher, up above 265. And then I do think we'll see some kind of reaction back to the downside there, maybe ultimately taking it out or maybe ultimately selling off from that point, right? But that's going to, again, take us further closer to earnings. And a lot of times Tesla does seem to rally before earnings and then sell off afterwards. So things that we're going to be watching, lots of stuff going on, a lot of volatility in the market with all the news. And so I hope you guys are doing well with your trading. Hope this content is helping you guys understand market structure and just where price is more likely and more probable to go. Don't forget to like and subscribe. I appreciate all the support. I look forward to seeing you guys tomorrow. Thanks.